Hello, everyone. Good morning from this part of the world. It's exactly 9:30 a.m. West African time, and that's about 30 a.m. UTC. And I'm very excited to welcome you all to yet another promising edition of our Forex Morning Mastery. I'm very excited indeed. It's been over a week since we've done the Forex Morning Mastery, and of course, I did explain to us all why this is. I moved to my new home, and of course, this it took a longer time than expected for us all to settle in, and of course, moving also to this place also came with serious internet reception issues. And honestly, I had no choice but to take a step back for a while, sort out things, get the preferred network that will be applicable to this area. But I'm still struggling to find one at the moment, as the network is a little bit tricky at the moment, and we might likely be seeing some log offs intermittently as expected. This is the best option I have at the moment. I will be moving out today to explore some other options which I've been advised to do, but be hopeful that this will play out as expected. So I'm very excited to have you join me. Comment section what your experience has been in the market, especially during in the absence of the Forex Morning Mastery. I'm very eager to hear from you guys after a very long time. Well, um, like I said, the move to my place has been comes with a serious internet reception issues, and that step back became a major eye opener for me actually. Since I couldn't be glued to the charts like I used to, I simply what I just did was prepare my trades at the beginning of the week, and then set my pending orders, trusted the analysis, and let time do its thing. And due to this, I wasn't over monitoring the chart, wasn't micromanaging the candles as I used to whenever when before moving to this new place. And guess what? Since my live stream, you will see my account for the Forex Morning Mastery session grew from, where is that screen again? Grew from about $1,400 to close to $1,800, as you can see at the bottom of your screen. And thanks to taking some time off, and one of the lessons I learned during the course of this break was that though I do know this before, but it further sinks into my psyche that you don't need to sit in front of the screen all the time or all day to be profitable. In fact, sometimes the more you chase the market, the more you miss the big picture. And of course, life is bigger than trading alone. We've got families, responsibilities. Sometimes we need some rest and some personal growth to attend to as well. And yes, the chat will still be there when we return. So moving forward, I want you all to remember that once you've planned yourself smartly, enter strong, and we can of course stay back. Sometimes our best trades will grow while we are living our own life. So for instance, I learned something during that break. I've spent too much of my time on the charts, always trying to give you guys updates due to this reason. And one thing I notice is that being on that chart makes me micromanage the situations all the time. And of course, this present break has opened my eyes into this, and I felt it's necessary I share this with you. Some of us might need this kind of insight to move from the level we are presently to the next level in our trading career. So let's carry that energy into the rest of the week. So I'm very excited to have you join me today. Trust you all doing very well, and I'm still here to hear from any one of you in the comment section. I would really love to hear what your experiences are like since we went on that 1 week break. So, before we move in, as always, I want to also welcome the newcomers in the house, those who are joining me for the first time. You're highly, highly welcome on board. I'm very excited to have you around with me this morning. Well, the Forex Morning on a normal day is a session we do 3 times in a week. That is Mondays, Wednesdays, and Fridays. And of course, we all come together here as a community to have a deep understanding into the financial market from both technical and fundamental perspective, with the utmost intent of identifying potential entry zone, either the buy or sell direction, using these fundamental and technical details we find on the chart. And it's important that I mention that this is not a signal service platform, but instead an avenue where we all come together to have a deep understanding into the behavioral patterns of market participants. In short, we want to see how market participants are thinking, and of course use that information to strategically position ourselves for the next move. So once again, I welcome you on board and encourage you to actively engage in the comment section. So moving into the business for today, you know how we do it. The first thing we want to be doing is to keep tabs with the market dynamics around the US dollar. And of course, we know how influential the US dollar is to all of the assets we are monitoring. We have been monitoring the USDJPY, the USOILSPOT, and of course the XAUUSD. And there is no way you trade any of these instruments without knowing what is going on in the US dollar market. You really want to know what is going on in the US dollar market for us to prepare ourselves for any trading ideas in that environment. Now, for instance, this week's the trading week, the US dollar started on the back foot. It started very, very weak this week. As you can see, this is the 4 hours time frame right here on the DXY. This is the US dollar index. So this is the chart that gives us an oversight into how the dollar is performing across all its pairs. And from the look of things, you can see here this week started on the what date was that? Okay, on the 19th of this month. That was somewhere around the $150 area, just right here. And since then, we can see the price of the dollar continue to drop to the downside as investors continue to digest news of the recent Moody's credit rating. So the US Moody's rating was downgraded during the course of the week, which further caused the dollar to nosedive, while the resurgence of some trade tension also weighed seriously on the. Now, the US dollar at the moment is trapped between and global tension. Now, the second half of this week will decide if safe haven demand saves the US dollar or rate cuts bet drags it further to the downside. Now, from a fundamental perspective, we have a handful of data that could probably support the US dollar this week. For instance, the concerns over sticky inflation is still very there, though CPI and PPI came in soft last week. The Fed officials also remain cautious about this, but with all of this in play, no immediate rate cuts are confirmed yet, keeping the US dollar somewhat supported at this point in time. Now, if we look at the chart closely, you'll see that price is back at a critical juncture right here, somewhere around the $99.50 level. Let me highlight it here so we can all see things from the same perspective. So we can see prices back into a critical juncture around the $99.50 level. So let me delete all of these as we do not need this one right here. And remember that this was the level that we were looking forward to during the previous week. I think about 2 weeks ago, we were looking at price breaking out, retesting the structure for us to confirm that buyers are stronger in price on. Now, price is back into the structure. And the question as we head into the second half of the week is whether this could be a support line for the price of the US dollar. Now, if we look at the other situation around the US-China tech tensions, where the US guidance against using Huawei AI chips and China's response signal, rising geopolitical risk, and of course reviving some US dollar safe haven demand as well. So we are at a really critical juncture, and also considering the fact that Fed officials like Mary Daly, Loretta Mester all stressed uncertainty over. If you look at the economic calendar, we had a bunch of Fed officials speak between Monday and Tuesday, and from what we see here over US policy effects and call for patience. So at the moment, there are no rush to cut interest rates just yet, and this could further support the value of the US dollar. Now, despite this level of hope that buyers are looking at to buy the US dollar, we cannot ignore the US data. Of course, we had weak April retail sales data. Like I did say earlier, we had a CPI, low CPI last week. We had another low PPI last week as well. And what else did we see here yesterday from the United States? Okay, so there are no major events so far this week. Then today, there are still no major events today as well, though we have some couple of speeches coming up later in the day. That's from Barkin and Bowman, who are all members of the FOMC committee. Now, whatever they will say today may likely give market participants an insight into the intending monetary policy decisions of the United States. And if we take into account the current Moody's US credit rating, which was downgraded, this signal for the US dollar as well. Now, hopes of USDJPY. So if potential agreement happens this week, we may see the USDJPY positioning and of course reducing the USD dominance in that particular pair, since we also looking at the USDJPY. So what to look out for this week? What are the things we want to be looking out for this week that will influence the US dollar, maybe negatively or positively? We don't know. Now, first of all, the second half of this week is laced with a bunch of Fed officials speak. I talked about the Barkin and Bowman coming up later today. That's about 4:15 p.m. UTC. That's about 5:15 p.m. local time. Then we also have tomorrow, we have, do we have any? Okay, we have Williams. Then I also learned that the Fed chairman is going to be speaking tomorrow evening as well. So definitely majority of market participants will be looking forward to this event, at least to get an insight into the monetary policy decision that may likely happen. So we have the upcoming Fed speeches, so we want to watch for any tone shifts in there, and of course this will influence the US dollar. Then we're also going to be watching the news as well. Any final update on the US-Japan trade negotiation is also a key factor in the determinant of price of the US dollar this week. Then we also have, I think tomorrow, yes, tomorrow we have the initial jobless claim count. That's about 12:30 p.m. UTC. Have the housing data. Is it the housing data? Let me see. Okay. So we only have the initial jobless claim count for tomorrow, 12:30 p.m. UTC, and there is these expectations that the data will come in a little bit higher than the previous month data. So we look forward to see what that actual data is going to be. So these are the events that are likely going to be influencing the sentiment in this market. Then we also have the S&P Global publication, which will be giving us an insight into the performance of the manufacturing and services sector of the United States. So this event here is coming in 1:45 p.m. UTC, and it's coming in simultaneously. And of course, it's an index between 0 to 100, where anything above 50 is considered to be an expansion in that sector, and anything below 50 is considered to be a contraction in that sector. So we also look forward to see what the S&P Global is going to be like. Will it come in higher than market had expected or lower than expectation? If it comes in higher, it will favor the US dollar positively, but if it comes in lower, then the US dollar may contract. So basically, these are the things that we are looking forward to pending our Forex Morning Mastery session on Friday. Now, with this information in mind, looking at the structure here, we can see the market is right at that $99.50 area. So if we can find a reversal setup around the structure, we may likely see price climb up. That is a breakout retest of the neckline could see price of the US dollar rise. However, if the price drops below this level, then we could see the value of the US dollar drop further to the downside. So with this information we have gathered here, I think it is high time we moved into the charts, and let's look at things from a technical standpoint. Now, since we didn't run the Forex Morning Mastery on Monday, I wonder how I am going to do this one. Should we go into the details of what I was looking at the beginning of the week while trading these assets, or I should just delve into the execution time frame to talk about what I am looking at? So, well, I don't know what to do now. Okay, so I think it will be appropriate I take you through what things are looking like on the higher time frame, so we can have an holistic perspective into what is really going on in this market in conjunction with the fundamentals. Of course, what we see here on the chart tells us how market participants are thinking, and of course gives us an insight into how they are digesting the informations from the fundamental factors. Now, on the 4 hours time frame here on Monday, while I was looking at this chart, the first thing I noticed was the fact that price action had been finding higher lows prior to the beginning of this week, and as a result of that, I had this ascending trend line in place, connecting the pivot lows, as you can see, since the beginning of this month. And interesting enough, price action had consistently respected it, finding higher lows along the way. Now, you know how we use our ascending trend lines in this community. As long as price remains above them, we shall continue to look out for patterns and structures that support buying ideas. Now, besides the ascending trend line here, I had my key level at the $61.25 level, an area which has been consistent with determining the direction of price action since the month of April. As you can see, this level here at one point in time served as both resistance and support line. And for the fact that price action closed the previous week around that key level, I felt it was necessary that this level will be the determinant for next week. Now, besides that, within this whole uptrend scenario, it is quite clear that the market has been confined within a range that is between the $63.50 level and the $60 area since in the last 1 week. That was prior to the beginning of this week. Now, due to this information here and due to these factors seen on this chart, and of course considering the fundamental factors, so if we look at the US oil market, oil prices is doing pretty well at the moment due to the Middle East war fears, which also collides with US supply surplus. We saw this in the economic calendar yesterday. Let me show you quickly. So yesterday we saw the API weekly crude oil stock report coming in at a whopping 2.499 million barrels for the previous week. Now, for those of us who don't know what this means that when we say the weekly crude oil stockpile, it means that in the US, the demand in the market was not enough to meet up with the supply. So the supply, but let me put it this way, the supply was way above the demand in the market. So there was reserve from the supply, so they had to save some in the crude oil stockpile, and this was to the tune of 2.499 million. Now, if this figure reduces, it shows that demand for crude oil in the US has increased. But if the crude oil stockpile rises, it shows that the demand for crude oil reduced. Now, this is expected to trigger some pressure on the US crude oil, which obviously we saw during the later part of yesterday. We saw price climb to the $64 area. Then we saw the sharp rejection to the downside following the API report. In fact, I was part of this bullish move. If you look at the bottom of your screen, let me go to my account history. You will see on the you see I bought the US crude oil around this 139 cents. That was exactly around this key level, and I was opportune to ride that momentum all the way into the $64 area. You can see exactly at the $64 level, I hit my TP target and closed with $37. So I was part of that move all the way up, and the immediate reaction to the API report resulted in the sharp move back into or within that range bound structure I talked about earlier. Now, the geopolitical tensions is also there, and there are speculations that Israel may strike anytime soon, may strike Iran anytime soon, and this could also threaten oil supply stability in the region, particularly around the Strait of Hormuz, one of the world's most vital oil checkpoints. Now, these factors here for me still makes the crude oil attractive at the moment, and we cannot get a confirmation unless this level at the $63.50 level is breached and broken to the upside. Of course, you can see how that same level had been a barrier since in the last 1 week, as every attempt by buyers to break out had failed. We saw the same thing happen last night, closing with a shooting star candle, further emphasizing the strength of the sellers around that particular area. Now, is the sentiment shifting towards bearish? This is what we don't know today, but based on the structure of the chart, when we scale down to the lower time frame, we will be able to understand how market participants are thinking. Now, we've talked about the US crude oil stockpile, which rose sharply, and this shows continued oversupply pressure in the market. Then we also talked about the Moody's downgrade of the US credit rating, which is not a very good signal for the US dollar at the moment, which could make the US dollar's value drop a little bit. And you know how you know that the US crude oil is directly proportional to the value of the US dollar. The US crude oil is a US denominated asset. Now, if the dollar rises, the US crude oil becomes expensive for other currency holders to buy. But if the value of the US dollar drops, then the US crude oil will become cheaper to buy. Now, with this situation here, are we going to see price rise? Well, let's scale down into the 1 hour time frame, which is our execution time frame, to see what we are looking at today. So scaling down into the 1 hour time frame, my network is doing that thing again. I just hope that things will work out fine as we move on during the course of the session. So hold on a second, let me see. Okay, we are trying to load here. Refresh this page. It's taking some time. Me a stronger internet reception. I'll probably have to prepare a makeup session so that or probably give us a written update on my Telegram platform, just for us to, I think that's what I will do right now, since we are having difficulties with the live stream. So I will try and see if it will be stable like it is right now for the next 30 minutes. If it doesn't, then I would settle for the option of writing out what my plans are and sharing them with you on my Telegram platform. Okay. So, are there any questions as regards to the US All Sports? Price is right below the key level for this week. My key level for this week is at the 145.00 area, and if we look at the higher important that key level is, I just hope this higher time frame will load up quickly. So let's take some time. Let's see. Okay, yes, it didn't take too long. All right, so this is the 4 hours time frame, right? And on the 4 hours time frame, I have a couple of ascending trend line which lines up exactly with that key level at the 145.00 area. And of course, we saw price break down that trend line for the first time in about 7 weeks, and a line which also that key level at the 145.00 area. Now, price is below the key level, right? And of course, I'm beginning to notice that sellers are finding it difficult to push price further to the downside. And of course, we have some reasons behind this. For instance, the trade deficit surprise. Japan's trade balance unexpectedly turned into a deficit of 115.8 billion Japanese yen in April. If I'm correct, I think we saw this, okay, yesterday. Look at it right here. So the merchandise trade balance from Japan dropped to a deficit of 115.8 billion Japanese yen, which was way below the previous month data, and of course below the expectations from market participants. Now, this has reversed all the previously due to slowing export growth and increased domestic consumption post wage hikes. Now, this situation could be an opportunity for the dollar to revive itself, and we're beginning to notice that happen when we scale down into the 15 minutes time frame. Now, I'm only going